Welcome back. My name is Jonah Beecroft. In this section, you will learn the mathematical aspect of accounting equation. We will solve some calculation to show the relationship between the components of the accounting equation. Without wasting time, get set with your writing materials. Let's dive in. Now, this is accounting equation part 2. In accounting equation part 1, we explore the components of accounting equation and what each of them, an example of each of the components. This aspect of the accounting equation is the practical aspect of accounting equation. Now, the first accounting equation is assets is equal to capital. That is, asset is equal to capital A is equal to C. But capital is equal to equity plus liability. That is to say that capital comprises of two components, liability and equity. That is why we say A is equal to C. But C is equals to L plus E. That is, C is equals to liability plus capital. So the equation A is equals to C or asset is equals to capital is the first accounting equation. In the absence of capital, in the absence of liability, A is equals to what? E. Now, we are going to remove capital in the equation and replace with liability plus equity. That is to say, the accounting equation now becomes asset is equal to liability plus equity. This is the first expanded form of accounting equation. You may be asked to calculate the assets and you will use this formula. A is equals to liability plus equity. You may be asked to calculate the equity. To calculate the equity, you use this formula. Equity is equal to asset minus liability. You may also be asked to calculate the liability. To calculate the liability becomes L is equal to asset minus equity. That is to say that there are 4 variables you may be asked to find in mathematical accounting equation. The first variable, they may ask you to find the capital, or ask you to find the assets, or ask you to find the equity, or they may ask you to find what? The liability. The second formula, the third formula, and the fourth formula are the various ways that accounting equation is being expressed. They may also ask you to calculate the working capital. Yes, you may be asked to calculate the working capital. And what is the working capital? The working capital is current assets minus current liability. That is the working capital. Current assets minus current liability. Yes. You may also be asked to calculate the net worth. What is the net worth? The net worth is the same thing as the net assets, which is also mean equity. So when they ask you to calculate the net worth, know they're asking you to calculate the net asset, and they're asking you to calculate what the equity. And the formula is asset minus liability. That is total asset minus total liability. You now discover that this number 7 is the same thing with number 3. They are bearing different names. That is why we have to make it known to you. So you should not be confused when they ask you to calculate the net worth or they ask you to calculate net assets. They mean the same thing as equity. You may also be asked to calculate the change in equity. Change in equity. What happened to equity when there is increase in assets? What will happen to equity when there is a reduction in the debt loan? What will happen to equity when there is loss in the business? When the business make loss? What happened to equity when the business make profit? You may be asked to calculate it. Then another thing you may be asked to calculate, you may be asked to calculate the retained profits. You may be given some information to calculate the retained profits. They may even ask you to calculate the drawing, how the drawing impacts on the capital. Note, and I repeat, capital is equal to liability plus equity. Where there is no liability, capital is equal to what? Equity. And when there is no equity, capital is equal to what? Liability. You should have that in your mind as we trudge along. Capital is equal to liability plus equity. But where there is no liability, capital is equal to what? Equity. Capital and equity, they are not the same. Equity is a subset of capital. Capital is a universal set. Capital is only equal to equity when there is no liability. We fire on. Mark that place. Capital is only equal to equity when there is no liability. When there is liability, capital is equal to liability plus what? Equity. Now, practice. Practice number 1. Use the information below to answer the following questions. Cash at hand, $30,000. Cash in bank, $26,000. Premises. Premises is $80,000. Short-term loan. Short-term loan is $20,000. Calculate 1. Current assets. 2. Calculate non-current assets. 3. Calculate the current liability. Now, this question demands you to know the components of the accounting equation. Assets are split into what? 4. Do you know the components? That's what this question is asking you. Current assets are cash at bank and cash at hand. We are going to sum them together because of space, and both of them give you 56,000. The non-current liability is premises. That is the only non-current liability there, and it is what? $80,000. Current liability is the short-term loan. That's only current liability there, and it is what? $20. Very simple. It's as simple as ABC. Now we take the next question. So you need to know the components of the accounting equation. Assets, what are they? Liability, what are they? What are their components? Intangible asset, what are they? Then wasting asset, what are they? So anywhere you see them, you recognize them and you know where to fit each of them. This question says, use the information below to answer these questions. Cash in hand, $50. Cash in bank, $1,250. Stocks, $4,880. Then furniture, $960. Building, $550. The next one is debtors. Debtor is $1,750. Then there is also creditor, $2,150. What did they ask us to calculate? Now, a mixture of asset and liability. Cash in hand, current asset. Cash in bank, current asset. Stock, current asset. Furniture, non-current asset. Building, non-current asset. Debtor, current assets. Creditor, current liability. What did they want us to find? Let us see what they asked us to do. Now, it says shareholders made $125 drawing. Wow. Shareholders made $125 drawing. Calculate the capital. Yeah, this question, there is no equity. So capital is equal to asset minus what? Liability. So we are going to assemble all the assets together, whether current asset or non-current asset, and sum them, and we remove the current liability. That is what we are going to do now. Solution. Capital is equal to asset minus liability. Capital less liability. So we are going to bring all the asset together, whether current asset or non-current asset in the question, we sum them. And the only liability I'm seeing there is creditor, which is $2,150. So cash in hand and cash at bank, we sum them together because of space, and we have 1,300. That is 50,000 plus 1,250. All are cash in hand and cash at bank. The next thing is what? Stock. The value of stock there is 4,880. 4,880. Furniture, value of furniture is 960. Then building, value of building is 5,500. Okay, we have merged it together, building and debtor. Because of space, we merge them together, we have 7,250. And when we sum this up, we'll be having 13,000. If we sum them up, 1,300, 4,880, 960, 7,250, we have 14,390. And 14,390 we minus or less only the current liability, which is 2,150, and we have the capital as 12,240. But do not forget that management withdraw 125 naira, $125. So the effect of drawing on capital is that drawing reduces what capital. So we are going to minus 125 from the capital that we have gotten, which is 12,240. So we are minusing what? 125, which is what? The drawing. And when we minus 125 from the capital, what we have is 12,115. This question reveals to us that drawing reduces what? Capital. When there is drawing in whatever you are doing in accounting, you go and remove it from what? Capital. That is the message. As you are doing your profit and loss account or your company account, there is drawing from the directors or from the sole trader or whoever are the stakeholder. The drawing will be deducted from what? Capital. That is the message this question is sending you. Now, the next question. A business has total assets as $150,000 and total liability of $70,000. What is the equity? This is very cheap, very simple, but it requires carefully study. You need to get acquainted with the formula. Equity here is just asset minus liability. Asset minus liability. We have gotten that in our equation in our formula. Equity is equals to total asset minus total liability. In this case, the total asset in this question is $150,000, and the total liability is $70,000. That is to say, $150 minus $70. Total asset minus total what? Liability. And what will remain is $80,000. $80,000, that is what will remain. Equity is what? Asset minus what? Liability. Let it ring. Let it ring like bell. Equity is what? Asset minus what? Liability. Capital is what? Liability plus what? Equity. Let these things ring. Let this remain in you. As you are diving into the world of accounting, let this thing be implanted in you. And those are the things that will lay good foundation for your understanding of accounting. Now, the next question we are going to take a look at says, use the information below to answer this question. Use the information below to answer this question. What are the information? The motor van is 3,000. A premises is 5,000. Loan, cash in hand is 1,500. What of loan? Okay, let's put on the loan 1,000. Stock we have 4,800. Creditors, we have 2,500. Cash in hand is 250. Debtors is 6,910. What are we calculating? Calculate capital. Calculate the capital. We are calculating the capital. The same problem, the same type of questions. Assets minus liability is equals to capital. Assets minus liability is equals to capital. Capital is asset minus what? Liability. That is the same thing for the formula for equity. Now, motor van is 3,000, premises 5,000, cash in hand and cash at bank 1,900, and stock is 4,800. Debtor are 6,910. All these are the assets. All these are assets. The total will give you 21,610. Now, how many total asset? Then the only liability there is loan and creditor. Loan 1,000, creditor is 2,500. So it becomes 3,350. And you minus 3,350, you have what? The capital. Now, we will not keep on giving out lecture without finding out how you are faring or how you understand these lectures. If we keep on giving lecture and you are not taking any practice or drill, then it is not good. So you are to use this question to test your understanding of the mathematical aspect of accounting equation. And the question reads, a company has 120,000 assets and 30,000 loan debt. Management increased the loan debt by 20%. By 20%. Calculate the equity. Calculate the equity. Equity is equal to what? Asset plus minus what? Liability. And the answer to this question is 84. But you must try to do it to arrive at this answer. And if you didn't arrive at this answer, then reach out to us at the comment section so that we explain more to you why you did not get it. But try and ensure that you practice it. The next question we're going to take a look at is ExxonMobil Nigerian Unlimited has $100,000 assets and 30,000 loan debt. If it increases the loan debt by $20,000, calculates its what? Equity. Yes. Now, this question is very close to your test assignments, and it is just a question of adding the 20,000 to 30,000, and so that the loan debt will become 50,000. That is all. And reduce it or remove it from the assets, because equity is equals to assets minus what? Liability. So the total asset now is 100,000 US dollar, and liability now become 30,000 plus 20,000, which is equals to what? 50,000. And what we do is to minus the loan debt from the assets. Assets is 100,000. Loan debt now becomes 50,000. And equity will become 50. What will happen to equity when there is increase in loan debt? Equity what? Reduces. Mark this. What will happen to equity when the loan debt is reduced? Those are what you need to know. What happened to equity when a company increases the loan? From this calculation, you now know that when company increases the loan debt, it reduces what? The value of equity. That is the message to you. The next question we are going to look at says, given the following, calculate the closing capital. Given the following, calculate the closing capital. Now, we are given the opening capital, which is 1,500. We are also given capital introduced with the additional capital to be 500. Capital introduced is an additional what? Capital. Then profit for the year is 800. Then cash drawing is 250. Cash drawing 250. Okay, the question is already calculate the opening capital. What is the formula for calculating the opening capital? You have to know it now. Formula is opening capital plus capital introduced plus profit less what? Drawing. Finish. Capital plus profit less drawing. Do not forget that there's one capital, opening capital, and there's introduce or additional capital. So we are taking both of them. Opening capital 1,500, introduce capital 500. Then profit for the year. Profit for the year is 800. You total this. When you total this, you will remove drawing, and that will give you what? Closing capital. That will give you 2,800, and the drawing is 250. So you remove drawing from 2,800, you will arrive at 2,550. And that is what? The closing capital. That is how to calculate the closing capital. Here also, the effect of drawing is that drawing reduces what? Capital. Drawing reduces what? Capital. Profit increases what? Capital. Losses reduces what? Capital. Yes. Note that profit increases capital. That is correct. Drawing and losses reduces capital. Have this behind your mind. Those are objective questions. Profit increases capital, yes or no? Drawing reduces capital, true or false? Losses increases or reduces capital, true or false? And this is the last question in this tutorial. And the question says, use the information below to answer these questions. Opening capital is 7,000. Additional capital is 350,000. Then net profit is 2,500. Closing capital is 10,500. What is drawing for the period? Wow. What is the drawing for the period? That is a question. Now, there's opening capital, there's closing capital. And there was a drawing, and the drawing is not known. So we are asked to find the drawing. What we need to do is to compute the closing capital and know whether it's the same figure with the closing capital given in the question. So closing capital is given as opening capital plus additional capital plus profit less what? Drawing. Now we do not know the drawing. So we are going to find out the actual closing capital here. We are not going to use this closing capital because in that closing capital, drawing have been taken away. So we want to find the actual closing capital and we use this formula to do that. So opening capital is 7,000. Additional capital is 3,500. And net profit is 2,500. So we are going to total this one and find out the actual closing capital. Suppose closing capital or actual closing capital is this 13,000. And the closing capital they gave us in the question is 10,500. If we take the difference, we can get the word drawing. So 13,000 minus 10,500 will give us the value of what the drawing. And the value of the drawing is 2,500. 2,500. On this note, we come to the end of this section of the tutorial. If there's any question or anything that require us to explain further to you, hit us in the comment section. I will not hesitate to give you answers. Now, if this tutorial have impacted in you in any form, in any way, we appeal to you to assist us to share this tutorial so that others will benefit from it. Our next tutorial is accounting equation and the double entry. We are looking forward to seeing you in that tutorial. For now, goodbye and God bless you. Till we see in our next tutorial.